Once again, this is Mark Espy with MarketTamer.com. We're taking a look at the CompQ, which is the Nasdaq composite. I must remind everybody this is all for educational purposes only. Please do your own due diligence. Well, we begin with a little bit of a historical perspective. Once again, we had the channel at the top of the range, and the high was put in on the 26th of April at 25.35. Then it broke decisively down out of that channel and traded down. We had the flash crash day and tried to regain some of the highs. It failed and came back down once again. It's not quite as crystal clear as what we see in the other charts that we've looked at today, but it is forming a narrower trading channel here on the top side, just above 2300 and about 2150 on the downside. We do have this low back here on February 5th, which is, I think, a substantial support, and that is at 2100. Then we have this channel from November and December. We have this shelf on the top side if we break out of this channel, and that's about 2400, and then this swing high about 2464, and then back up to the original channel that we did the breakout from. So now if we break down out of this current channel, where are we going to go? Well, below the 2100 level, we have a Fibonacci retracement level, a 50% fib level at 2062. We also have a double bottom that was put in October, November of 2009 at 2050. Then we go back a bit further and we have a gap. Gaps always need to be respected, and they can act as significant support and or resistance. In this case, support between 1900 and 1950, and that was put in July 2009, as well as a gap that coincided with that in September, October 2008. And if we break even further down from there, then we have a swing low at 1727 from July of 2009. Interesting to note here that the 200 seems to be acting as somewhat of a magnet. You can see here as we broke down through here, typically what will happen when you break down through a major moving average is you will have a retracement back up to retest that moving average, and then it will fail or continue to go up. And in this case, it continued to go back up above the 200, traded several days above there, and now we find ourselves once again coming back down. So it seems like it's sort of straddling this major moving average. It really doesn't know what it wants to do at this juncture. The Bollinger Band, which is the lower Bollinger Band here you can see in green, contains, and the upper band as well, would contain about 95% of the price action. So if an index or stock moves too fast, too quickly, too far, and moves outside of the band, what you will see most of the time is that it will come back up, or at least trade sideways back into the bands, and you can see that that's exactly what occurred here. The MACD and the stochastics are not really telling us too much. We did spend a brief period of time in the oversold area and came back up, and then we did have a MACD line cross over the signal line and a retracement of the histogram here indicating loss of momentum to the downside. So I think the market is fairly directionless right now. I do feel comfortable it's going to stay in this range for a bit of time, and then we'll just have to watch these levels that I talked about and take appropriate action. I would really encourage you guys to remain hedged and keep your eyes on the market and stay diversified and stay nimble. With that, I look forward to talking to you next week.